Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm AlgoBot, and today we're studying a trend continuation system called Anchored Momentum Trend Shift. It is built on a lesser-known momentum reading called Anchored Momentum, and instead of chasing reversals, this approach waits for a brief pause inside an existing trend and then looks to rejoin that trend in its established direction. By the end of this video, you'll understand the indicator, the entry and exit rules, the actual code, and a candle-by-candle example. Remember, everything here is educational information only, not financial advice. Let's get started. So what does this expert advisor actually do? At its core, Anchored Momentum Trend Shift is a trend continuation system. That means it does not try to predict tops and bottoms. Instead, it identifies an existing trend and then tries to join that trend after a small, orderly pause. The engine behind it is the Anchored Momentum Oscillator, developed by Rudy Stefano. Ordinary momentum compares today's price to a single price a fixed number of bars ago. The problem is that one reference bar is noisy. A single spike in the past can distort the whole reading. Anchored Momentum fixes both ends of that comparison. The numerator is a short exponential moving average, so the recent end is smooth rather than being one raw tick. The denominator is a longer simple moving average with an odd length, centered several bars back. That centered average is the anchor. Comparing a smooth present to an averaged, centered reference makes the oscillator far steadier, with turns that arrive with very little lag. Alongside the oscillator, the strategy uses a long trend exponential moving average as its regime filter. It only considers long trades when that trend line is rising and price sits above it, and only short trades when the trend line is falling and price sits below it. Everything is read from a single primary time frame. Nothing about the symbol or the time frame is hard-coded, so the same logic can be applied across different instruments. It was designed with liquid, trending markets in mind, such as major currency pairs, gold, and index products, on time frames from 15 minutes up to 4 hours. This type of system tends to suit a patient, rules-based trader who prefers fewer, more selective entries over constant activity. As always, trading carries risk, and losses are part of the process. Let's walk through the exact logic step by step. Everything is evaluated once per completed bar, so the strategy waits for a bar to close before making any decision. First comes the regime filter. The strategy calculates a long trend exponential moving average and compares its current value to its value several bars ago, a distance set by the SlopeBars parameter. For a long setup, that trend line must be rising and the closing price must sit above it. For a short setup, the trend line must be falling and price must sit below it. If neither condition is met, nothing happens. Next, the Anchored Momentum Oscillator. It equals 100 times the fast exponential moving average divided by the anchored simple moving average, minus 1. When that value is above 0, the fast average sits above the anchored reference, which signals net upward drift. Below 0 signals downward drift. The sign is the regime, and the slope is the impulse. Now the key idea. Rather than trading the zero-line cross, which tends to arrive late and whippy at reversals, the strategy trades the dip and resume inside a live trend, while momentum never leaves its sign. For a long, the oscillator must have made a shallow valley 1 bar ago that stayed positive. In other words, its lowest value dipped toward 0, but remained between 0 and the PullbackMax level, without flipping negative. This bar it has turned back up, forming a local valley. And the just closed bar itself must be bullish, closing above its open. When all of that lines up with a rising trend, the strategy signals along. The short side is an exact mirror. Momentum must make a shallow peak that stayed negative, between the negative PullbackMax level and 0, then turn back down, with a bearish closing bar and a falling trend. Because momentum never crosses 0, the strategy is joining a breather within a trend, not calling a bottom or a top. Deep pullbacks that puncture the 0 line are rejected as possible regime changes. Finally, risk management. When a trade opens, the stop is placed at the ATR multiplied by StopAtrMult multiple, and the take profit is that risk multiplied by the reward-risk ratio. Once price moves break-even R risk multiples in favor, the stop jumps to break-even and then trails by trail at R multiple times ATR, and it is never loosened. Only one position runs per magic number, and a spread guard blocks entries in poor conditions. Let's read through the core of the meta-editor code on screen. At the top, we have the key inputs. EMA period is the fast average that forms the numerator of anchored momentum. Momentum period is the anchor half-length. The anchored average length is 2 times that, plus 1, which keeps it odd and centered. Trend period is the regime filter. PullbackMax caps how deep a pullback is still allowed to count. StopAtrMult and RewardRisk shape the stop and the target. Just below, the strategy computes anchored momentum at 3 consecutive closed bars, labeled now, previous, and the one before that. Each is 100 times the fast average divided by the anchored average, minus 1. It also builds the trend flags. Trend up means the trend line is rising and the close is above it. Trend down is the mirror. Now the long block. The valley test checks that momentum dipped 1 bar ago and has turned back up this bar. The shallow test checks that the dip stayed above 0 but below PullbackMax. If those hold, plus a rising trend and a bullish bar where close is above open, the code calls trade.buy. Notice the stop loss is the ask price minus the ATR-based risk, and the take profit is the ask plus the reward to risk multiple times that risk. The short block mirrors it exactly. A shallow peak that stayed below 0, turning back down, with a falling trend and a bearish bar, calls trade.sell. Here the stop sits above the bid, and the target sits below it by the same reward-to-risk multiple. Simple, symmetric, and rule-based. Let's walk through this illustration candle by candle. On the price chart, you can see the blue trend exponential moving average, and in the panel below it, the gold anchored momentum oscillator, with its 0 line and the shallow pullback bands at plus and minus 0.15. We begin on the left in a rising market. Notice the first 2 candles push higher. Price sits comfortably above the blue trend line, and the trend line itself is sloping up. That satisfies the regime filter for a long. Down in the oscillator panel, anchored momentum starts up near 0.3, well above 0, confirming healthy upward drift. Now watch the third and fourth candles. Price eases back, forming a small dip. This is the breather the strategy is waiting for. Crucially, look at the oscillator. It slides down from 0.3 toward the 0 line, but it stops inside that green shallow dip band, reaching a valley around 0.07. It did not fall through 0. That is the whole point. A shallow pullback that stays positive is a pause, not a reversal. A deep pullback that punctured the 0 line would have been rejected. On the fifth candle, the one marked with the buy entry, momentum turns back up out of that valley, and the just closed bar is bullish, closing above its open, while the trend remains up. Every condition is now aligned, so the strategy signals a long at the buy entry marker. The stop loss is placed an ATR-based distance below, and the take profit sits above at the reward to risk multiple, which by default is 1.8 times the risk. From there, price resumes its climb. The next candles print higher highs. Momentum expands back toward its peak near 0.44, and price marches up into the take profit marker. The long trade is complete, having ridden the continuation of the existing uptrend. Now the market character changes. Around the 8th and 9th candles, price rolls over, slips below the blue trend line, and the trend line itself begins to slope down. In the panel, anchored momentum crosses below 0, flagging the shift from upward to downward drift. The regime filter now favors shorts. Watch the 10th candle. Price gives a small bounce, and momentum ticks up to form a shallow peak around minus 0.05, sitting inside the red shallow peak band between minus 0.15 and 0. Again, it stays on its side of the 0 line. On the 11th candle, the one marked with the sell entry, momentum turns back down, the closing bar is bearish, and the trend is falling. The mirror image of our long setup is complete, so the strategy signals a short at the sell entry marker. This time the stop sits an ATR distance above, and the take profit sits below at the same reward to risk multiple. Price then continues lower through the final candles. Momentum extends down past minus 0.4, and the market reaches the second take profit marker. Both trades followed the same principle. Wait for the trend, wait for a shallow with trend pause and momentum, and rejoin in the trend's direction, always with a predefined stop and target. This is a simplified, illustrative example, and real markets will not move this cleanly. And that brings us to the end of our look at anchored momentum trend shift. We covered how the anchored momentum oscillator smooths both ends of a momentum reading, how the long trend exponential moving average acts as a regime filter, and how the strategy joins a trend after a shallow, with trend pullback rather than trading a zero-line reversal. We also read through the actual code and walked a long and a short example candle by candle, including the ATR stop, the reward to risk target, the break-even lock, and the ATR trail. Remember, this video is educational content only and not financial advice, and trading always involves risk, including the risk of loss. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to study next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.